This is The Real Story with Michelle Makori.
Tonight on The Real Story, is President Trump attempting the most ambitious economic reset in modern history? My next guest believes he is. A reset aimed at dismantling a hyper-financialized global system and replacing it with a more production-driven, capital-disciplined order rooted in hard collateral. But recently, the Supreme Court struck down the legal foundation of his sweeping tariff regime, ruling that the executive branch exceeded its authority in imposing broad tariffs under emergency powers. Now, if tariffs are a central lever of that reset, how damaging is this ruling? Does it derail the reset? Is this merely a shift in the battlefield? Does it force it into a more radical phase? Well, Tom Luongo argues that tariffs are one tool in a broader battle over sovereignty, capital flows, and control over the global monetary system, and that we are in the middle of a systemic reset. Tom Luongo is the publisher of the Gold, Goats, and Guns newsletter, mapping the intersection of geopolitics and capital markets. He is a former research chemist, also a former amateur dairy goat farmer, and one of the most unapologetically contrarian macro voices out there. Tom, welcome to The Real Story.
Thank you, Michelle. It's good to be with you.
All right, Tom, we have a lot to discuss. I do, of course, want to frame things in your broader macro thesis, but let's first focus on this latest development, the United States Supreme Court ruling 6-3 that President Trump exceeded his authority by imposing sweeping global tariffs under national emergencies law, finding that the International Emergency Economic Powers Act does not give the president the power to set tariff policy without Congress. That ruling struck down the so-called Liberation Day and other broad tariff orders that had applied 10% or more on imports from dozens of countries around the world. It ruled that those actions were an unconstitutional use of emergency powers and that the power to tax, including tariffs, in fact, belongs to Congress. Now, the president called this ruling deeply disappointing and incorrect, and he says that the administration will continue to pursue aggressive trade measures under different legal authorities. Let's watch and hear what the president had to say.
In order to protect, and it says so, in order to protect our country, a president can actually charge more tariffs than I was charging in the past period of a year under the various tariff authorities. So we can use other of the statutes, other of the tariff authorities, which have also been confirmed and are fully allowed. Therefore, effective immediately, all national security tariffs under Section 232 and existing Section 301 tariffs, they're existing, they're there, remain in place, fully in place, and in full force and effect. Today, I will sign an order to impose a 10% global tariff under Section 122, over and above our normal tariffs already being charged. And we're also initiating several Section 301 and other investigations to protect our country from unfair trading practices of other countries and companies. Thank you for your attention to this matter, and I say quite simply, which I've said for a long time, make America great again. And interestingly, we've already made it great, so I don't have to use that, but I don't think we'll ever give up on MAGA. MAGA is always going to be with us.
All right, Tom. So, your reaction?
It's pretty much exactly what I would expect from Trump. I think the administration realized that this was a tail risk for them. I think also, if you go back over it, I didn't expect the Supreme Court, to be honest with you, to strike this down the way they did. But they did. And okay, well, there's chalk one up for the Tom was wrong category. That doesn't happen all that often, I guess. But I think also that what Trump did originally was to attempt to see how far he could go, and with the tariff authorities that he already has in place, because part of what he's been doing up to this first year that he's been in office is to recapture and redefine what the Article 2 powers of the president actually are, because they've become very muddled over the years. So he's attacked on immigration policy. He's attacked on tariff policy. He's attacked on so many different, things that he's allowed to do, just to remind everybody, oh, by the way, a traffic court judge in Maryland does not get to decide on foreign policy for the United States, that kind of thing. And so I think this is, again, another one of those instances. Judge Kavanaugh's dissent, 63-page dissent, was very interesting in that respect. And he made it abundantly clear, because he gave Trump the roadmap. These are the powers you can use, and you should use them to the fullest extent of your executive power. And the rest of the ruling itself, especially the opinions given by Roberts and Barrett and Gorsuch, are a bit of a mess from what we can, what everybody's been saying so far about this is, and they've been splitting they split a lot of hairs. And at the end of the day, okay, so you can't do this. You say now it's settled law, apparently, at least for now, until it's challenged again under some other situation. So it is what it is. He's got a setback, and then he immediately just turns around and goes, okay, fine, we're just going to put a 10% tariff on all across the board, the quote unquote reciprocal tariffs that he was using to force trade negotiations. Yeah, okay, those are gone, but he's still going to use them exactly the same way. One of the things he said, I don't know if you read his Truth Social post this afternoon, was that the trade representative from Vietnam was in his office, and after the ruling came out, he looked at him and said, "This just means that you're going to put even more tariffs on us, aren't you?" And he's like, "Yeah, pretty much." And so I think what's going to happen now is Trump is going to have to use other means by which to get to the same result, which is to use economic power to and sanctions and everything else in order to craft trade deals with our trade partners. And he just can't use a blanket tariff authority. That's what the Supreme Court's taken away from him, and he'll adjust. And the big problem, though, going forward, and this is one of the things I think we may not have quite thought about yet, is that the reason he did it the way he did it was that because it was immediate. He could just say, we're doing this today. That's the end of it. These other sections that he announced, that he talked about in that clip, some of them have a 90 to 180 day period of implementation. There's a review and discussion period that has to take place in order for that to happen. He has the authority, but it's going to slow down his ability to put those things in place. And so now he's going to use the threat of those in negotiations, just like he would have just said, okay, now you're dealing with it now. So yeah, it's not good, but when given lemons, you make lemonade, right? So.
And we certainly saw President Trump do that today. Look, Tom, I know you're not a legal authority, nor a legal scholar, nor a constitutional scholar, so I'm not going to get into the minutiae of the ruling and what the next available options could be that would likely be upheld. That's not your form of expertise here. But from what I understand, you're saying that this element of tariffs as leverage has not been taken off the table.
I don't think so. And I think Trump made that, I think what Trump was really attempting to do was to say, look, we have issues that are happening right here, right now, that we have to fix as quickly as possible, be it the flow of fentanyl into the country or this or any of the other things that he's deemed national security. And what he's saying is legislative and judicial time are far too slow to react to the existing world events. And so we're going to use this mechanism. If you grant me effectively, say, yes, you have this power, it gives him the ability to react in real time to real-time situations in geopolitics and in foreign policy. Because he mentioned again in that big Truth Social post he put out before he went to the podium this afternoon was really interesting. He said, look, I used the tariffs as leverage to stop 5 of the 8 wars that I stopped. I just threatened everybody with tariffs and they all went, oh. And then, that was it. Then they came to the table and the deal was struck. And and he was using that as a means by which to get the SCOTUS to understand that I have to have this power in order to be able to operate as, a functioning executive in a fast moving world. And this is part of the problem that we currently have, is in many ways that our legislature and our judiciary. And I'm not advocating that we, go to dictatorship or anything, or don't get me wrong. What I'm saying is
Okay.
when you realize that they operate at a different time frame and a different speed, they operate at almost like an 18th century speed for a
Right.
21st century world. And that's just the fundamental tension that exists within our current constitutional makeup. And and this ruling today did nothing to help that. If anything, it made it worse. And that's actually the biggest, I think, damage ultimately.
I mean, you raise a valid point that
Mm.
when these checks and balances came about, and they do make tremendous sense and have tremendous value, it was a different world, and
Mhm.
certainly a world where things moved at a much slower pace.
Mhm.
But also in the context of how the United States operates with other countries, President Trump is subject to election cycles and
Mhm.
election terms compared to China, for example,
Right.
where there is no such limitation. But to
Mhm.
your point, tariffs, a big tool of diplomacy. And yeah, he did argue that the tariff threats were effective in pressuring foreign governments, including China and Mexico, on
Mhm.
fentanyl enforcement and
Sure.
broader geopolitical leverage. As you said, the tariff pressure helps de-escalate multiple international conflicts. Now, you could argue that is in fact the economic emergency leverage that the executive branch should have in moments of national
Mhm.
and economic stress, and that does fall under emergency power classification. But nonetheless, that wasn't how the court saw it. But
Nope.
is this now taken off the table completely? Like, how is Trump perceived on the world stage now?
Yeah,
Is
that's a good question, Michelle, and I can't really. I think we should. I have a general rule at this point on a lot of these things is I think the 72-hour rule. Like things like this happen, we all want to react in real time. We all want to overreact sometimes in real time because, well, it's a big story. We should talk about it, right? Sometimes you have to kind of let it percolate and let it settle down and let everybody get their emotions out of the way, and then we'll see where we are by Sunday or Monday.
right.
Because everybody should be there's going to take some time. I know that it's clear that the administration has a plan. I know it's clear that they have a game plan for this and that they whiteboarded all this stuff. Scott Bassett said as much. So did Trump. So let's just see how they play it, because there are going to be moves on this board that I don't think many of us, we may all think that we have knowledge of the situation, but we really don't. So best to just step back for a second and actually think about it. The way I would look at it, and this is to start looking at it in terms of all the other things that are happening at the same time. Like we have all this fallout from Epstein, which I hate to bring like this stuff up because I know that's not necessarily where we kind of should go, but you can't take this ruling knowing it was coming out today, and it almost felt like everybody knew it was coming and what the ruling was going to be. Because the markets didn't really move other than gold and silver, which I think you and I absolutely need to talk about. But when you talk about it, when you think about it in terms of Prince Andrew's arrest yesterday and Trump's pressuring Iran, the IRGC, and the fight over the Chagos Islands, and so many things that are happening, and what we're watching is the dissolution of the special relationship between the United States and the United Kingdom in real time, and that's a big deal. And well, it's a big deal. I happen to think it's a very good thing for not only us but the world. And then we can get into that more. But just understand that this is part of the entire milieu. There's a lot going on here, and so I hate to say this is what his next move is going to be, because I'm not sure quite what it's going to be other than the broadest terms.
But it
So
sounds like you don't necessarily see this as a meaningful constraint, and that the Trump administration is simply going to shift tactics, that this was something that they may have already accounted for, right?
I think they have, but what I also say is that's also partly my hope.
Uh-huh.
So
Okay.
how about we understand now just how dangerous the situation is, and the fact that, as I brought up earlier, Congress and the judiciary are moving at one speed. Our
Uh-huh.
enemies are moving at a much faster speed. Trump is trying to match them speed for speed and maintain operational tempo. And what does that mean for domestic policy? What we know, what we can already see them doing. Now I go back to the insurrection that we dealt with in Minnesota, last year's LA riots, all of the things that there's all of these things that are beginning to percolate to the surface. And it feels to me, and again, we're going to get into, what do I think? I think the city of London and Davos hate us and want us back under their fold. Well, they're going to do everything they can do to destroy Trump and his plans to, effectively end the American Revolution after 250 years. And, decisively, and this is part of the problem. So it's like, I don't want to get ahead of myself, obviously, but yeah.
Okay, so it's a setback. It's too soon to speculate whether countries are going to come and try and renegotiate their trade deals. I was watching some coverage on an Indian channel of this, and they were echoing a similar sentiment, saying the best thing to do now is nothing, because it's Trump. So you don't really know what he has up his sleeve. So they were like sort of advising Modi, say nothing, do nothing, because you need to wait and see what can happen here. And I get that point. But I mean, arguably, I think it does weaken his authority and his power on the world stage. And it is certainly not a positive. It is detrimental to the Make America Great agenda.
It is not a good thing. I'm not going to, it's like, we know that is not a good thing. So now it's like, how do you make the best out of a bad situation? Or how do you make the best out of the new rules that have been put in front of you? And that's, I think, and to your point, I think you're correct about framing it that way. I don't want to get histrionic. I can tell you that, my initial reaction was not good. And I can tell you that, I don't know, I just turned to my friends and I went, so everybody, I'm booking time at the range. Hey, I don't know what's coming next here. I just know that I spent a little bit of time this afternoon thinking in those terms. Whether or not that was rational or not is a different story. You know what I mean?
It's subjective. What we may consider not a good thing, other people could consider a good thing. But in the agenda of trying to have this restructuring, which you think the president is trying to do, that is clearly a setback. So we'll look at it with regards to that framework.
Right.
And you did see tariffs as one tool, one instrument inside a much larger structural transformation that you have described as the most ambitious economic reset in modern history. So let's take a step back. Let's zoom out. Walk us through that framework. What is the bigger picture we should be looking at? What is actually being reset?
What's being reset is the end of the virtualization of money flow in the broadest of broad sense, which is that, we don't really care about the movement of the collateral around the world anymore. What we care about are the claims to collateral. And then even worse than that, the claim, what have we defined as collateral? And I'll explain all these terms in a minute. So in the 19th century economy, silver was the flow instrument around the world. Gold was saved, silver flowed as money. And eventually we wound up with a global credit system. As trade globalized, we wound up with a global credit system that flowed through the systems of City of London, the shipping insurance, the clearing houses, the legal structures, the contract law, and all of that stuff. And it was all defined by London. And you can argue it was, the natural evolution of a globalized trade system. But eventually, silver flow itself became virtualized. We traded claims to silver as opposed to the actual silver itself. Okay, now let's move into, and then we had the versions of that with the international gold standard. But effectively, all of it winds up being the same thing. When there's a temporal disconnect between where money is and where goods are, where the money is, and where they all need to flow to, and who's the more trust you build into that system, the less trade friction you have, and the more money and trade can flow. Now, he who controls that system is really in control, of course, of the political arc of the world as well. So now today, the collateral is U.S. Treasuries, and the flow instrument is U.S. dollar. Well, in my mind, when I review the last, so let's just go back to Bretton Woods. I review those last 80 years. I say to myself, who was actually in charge of the value of those dollars? Was it the United States and the Federal Reserve? who was setting the price for those things. So during Bretton Woods, we had a fixed rate of gold, the $35 an ounce. The Bretton Woods era failed. The London gold pool that was supposed to enforce $35 an ounce gold failed, and eventually, and sovereign gold on the U.S. balance sheet, national savings flowed out, and we lost roughly 15,000 tons of gold from its peak down to when Nixon closed gold convertibility. Now, after that, we had the rise of basically the dollar reserve standard. But the question then is, who's pricing those dollars? And was it the domestic dollar markets having control over the value of the dollar and the price of dollars you paid for it, i.e. the interest rates, or was it the offshore or eurodollar markets? And once you understand that it was LIBOR, because after 1984, all U.S. dollar debt contracts were indexed to LIBOR or referenced to LIBOR, you realize that, of course, London has control over the value of our dollar. And the Federal Reserve actually is, in many ways, kind of a captured pawn on the board. Jeff Snyder used to make this argument when he was with the Lombard Partners back 10, 12 years ago. I learned that idea from him, and then I just kind of watched it bear itself out. And then the United States implemented SOFR, the Secured Overnight Financing Rate, and moved the pricing of dollars back to a collateralized rate here in the United States, known as SOFR, where now the price of dollars effectively worldwide, especially since all debt in the United States originated in the United States, has to be indexed to SOFR. Now SOFR is in charge of the pricing of dollars. Therefore, the United States itself is in the business and in control of pricing of dollars, taking that power away from the City of London. And so now we're 4 years beyond that. And now Trump is trying to change the free trade deficit, debt, taxes, all of that system that we all know so well. And we all, as hard money guys, many people can't stand, right? We're all like, fiat currency is bad, hard money is good. Whether you're a gold bug or a Bitcoin maxi, it doesn't really matter. It's two sides of the same coin. So knowing full well that in order for the system to maintain liquefied, it has to continue adding credit to the system and to keep it liquefied. Okay, fine. Well, what if we're trying to re-collateralize the world? What if we're trying to move the monetary system back to a system of sovereign nations with sovereign currencies and trade balances being settled up in collateral assets, on a net 90 or a net 180 basis or net 30 basis, however you want to do it. And I believe that that's where we're headed. And tariffs are a very, very strong part of that by putting up barriers for the U.S. economy between the price of offshore dollars and the price of onshore dollars. And I think that Trump and Bessent and the rest of his team are trying to erect barriers so that we have a very similar system that the Chinese currently have, which is an onshore yuan and an offshore yuan, which trade at sometimes a discount and or a premium, depending on the health and state of the domestic Chinese economy. So that's the broad stroke of this. And in order to be able to enforce the value of the onshore dollar to trade at a discount to the offshore dollar, because it's been the other way around. We run deficits. Our foreigners buy our debt. They get a coupon rate, which we American taxpayers have to pay. The national savings effectively flows out to them, and then they have the whip hand over our domestic foreign military policy and everything else. Because at the end of the day, if they dump our debt, then we're in trouble. So you want to reverse that process completely. And strategically, you would want to reverse that process if you're actually looking to build a sovereign United States. And I don't fundamentally believe that we're a sovereign nation anymore. And this is the problem. We're not sovereign because we have a legislature and we have in many ways, and now a judiciary, we're finding out everything else. All these people have been bought and paid for. Trump even said that today when it was asked by somebody in the press. They said, you mentioned in the past, you think that there's like foreign influence over our Supreme Court decisions. He's like, do you believe that? He's like, you wait, we're going to let you know. You're going to find out soon. Meaning, when you stop and I think what he means there is he's like saying, look, they interfere in our elections. They interfere through our intelligence services. They leak. We have a fundamental problem with
Mhm.
foreign influence in every aspect of our national institutions. That's what needs to be fixed. So you can't fix the politics until you fix the money.
Right. Well, I mean, there's certainly foreign influence in higher education and in universities. We've certainly confirmed that. As to how far it goes, I will let you do the speculating.
Oh,
Um,
I do that a
but
lot.
but it certainly is not inconceivable that there is foreign money trying to influence various aspects of government. It's been quantified, as I said, on the higher education level at universities and colleges and such.
USAID was doing this as well. The NGOs. I mean, when you really stop to look at what we've learned through Doge and everything else over the last year, Michelle, it goes far beyond even just education grants and other things. You have NGOs taking tax money, putting it in 501c3s, putting it in 501c3s, putting it into all these, wrapping it in all these NGOs. The money goes out, pays for, goes overseas, buys treasuries, then turns around, comes right back in, and then is dumped into frankly the Democratic Party's coffers and local elections, and we see it everywhere. And at a certain point, this is part of the reason why the first thing Trump did was shut down as much of the NGO money as he could get away with. And USAID was the most important one. There's others. Congress blocked him on the National Endowment for Democracy, but there are many others, and there's a lot of other funnels and pipes throughout the government spending and the grant and permitting process.
Right.
Permitting, granting, all that stuff. That's it's hundreds of billions of dollars a year minimum, and maybe trillions.
I,
And so
Again, we'll leave the speculating to you,
sure.
but yeah, foreign money influencing, I don't think that's beyond the realms of possibility here. I
Sure.
want to focus on the economic side some
Mhm.
more and further break down what you think President Trump is trying to do. And
Mhm.
you've said that he wants to move the United States away from what you've called a hyper-financialized Anglo-style global system
Mhm.
and back towards a more Hamiltonian productive model. I want to
Right.
unpack that a little bit further, but first, to give our viewers a bit of context, Alexander Hamilton, the first US Treasury Secretary, he believed that the strength of a nation comes from productive capacity, not just trade, domestic manufacturing, infrastructure, and strategic industry. So, in that context, explain what you think Trump is trying to do and why you think he wants to re-collateralize, as you've said it.
Well, it shouldn't be all that difficult to understand. I mean, ultimately, if you think about it, what he wants is a restoration of the middle class. And the classic middle class is built from, there's a number of pieces to that puzzle. Home ownership is one of them. A good steady job where wages rise faster than inflation, all of that stuff, right? And the first thing he did, and he's made this abundantly clear, he says, like, look, the first thing I got to do is go get back some of the money they stole from us and then use that to invest it back in the country. And that's what he used the tariffs in order to force trade deals in order to get these investments made so that we can start building and we start bringing back a level of manufacturing and productivity that is commensurate with a healthy, growing society. Because so we have to start there. And the hyper-financialization. So what this means is this like what Scott Bessent said. It's been Wall Street's turn. Zero bound interest rates, another thing, and all of these, and the tax structure and everything else has benefited Wall Street. It's benefited credit-based assets. We need to be looking at production-based assets and commodity-based assets as a means by which to build real wealth. We've been moving money around and making money on money without actually having an improving productivity class where everybody gets um, to benefit from that. So this means, I think, long term, I think Trump wants to do away with the income tax. I don't think he's like kidding when he mentions it in passing. I think he wants to get rid of the system where we are, renters on our own property, where we are renters of our own labor, and where we owe our, our well-being, or such as it is, to foreign creditors, and who are taking our dollars, moving them through the infinite rehypothecation engine that is City of London, which has much different capital handling rules than we have here in the United States, and using that as a means by which to attack the structure and the foundation of our very society. And it's not just us that are the victims of this. Everyone is the victim of this. And so this is, you're trying to end the colonial extraction system of debt, taxes, and inflation, or another version of debt and taxes, and bring it back to collateralized lending and a collateralized economy, where at the core of it, I think we're moving back towards gold-backed currencies, or gold and or silver and or Bitcoin-backed collateral lending that is far less leverage driven, right? So we're not levering up a levered asset on top of a levered asset on top of a levered asset. We're now just saying, look, we need to get back to something where we can look at PDEs of mature companies and go, yeah, 8 sounds expensive, not ridiculous, right? That's we should be getting back to that. We can't get back to that until we actually have a monetary system that isn't blowing up, insane levels of credit assets on a regular basis. And I think that what we're living through right now is the first phase of this, is that we have to have a radical repricing of the collateral underneath that system. And that radical repricing would be allowing the price of gold to rise significantly, allowing the price of silver to rise significantly, and potentially, because he wants this, of course, to be digital, then we need to have Bitcoin as a fast-moving digital asset that can also act as cross-border collateral. The thing that's been the thing that has frustrated hard money guys for decades now is the understanding that the hard assets, gold and silver in particular, are suppressed. The mechanisms of suppression, it's been covered by all of us 1,000 times over. But the question now is somebody actually trying to break it down? So for most of my life, and most of the time that I've actually, cared about any of this, I started buying gold in 2002 and silver in 2002. It's been the triangle trade between LBMA futures, COMEX futures, and GLD and /SLD. And then that triangle trade of using those assets as means by which to create infinite amounts of paper, gold, and silver in order to overwhelm demand for the actual metal and keep the price suppressed, was a way to, of course, validate the existing system of, the market doesn't really care. Look, gold isn't breaking out. Clearly we can afford more inflation or more dollars flowing or whatever it is. That's clearly not the case anymore. And I think that Trump and Scott Bessent came into office last year and immediately started attacking one leg of that triangle trade, which is the London Bullion Market Association, of the LBMA. And I started with gold. I shifted to silver. The Japanese are in there too, and there's a lot to unpack there. But I've watched all of that in the case, in understanding that the goal was always to pressure and constantly pressure the European markets, especially the ECB and the Bank of England, to be forced to buy our treasury debt in order to stifle the rise on the long end of our yield curve, because they couldn't afford to have the market then maintain the same bond spreads between U.S. debt and, say, German debt. Like, it couldn't be that, we could let U.S. debt go and not have German debt go. I mean, if the U.S. 30-year, for example, went to 8%, the German 10-year is not. Christine Lagarde is not going to be able to hold it at 2.5%. It's going to have to rise to 6%, and if that happens, then you'll blow half the German banks up, which would have so.
Let's take a step back here, Tom, because
Sure.
you've said a lot there. You've said
Oh,
a
I know,
lot.
I know. trying to keep it organized, Michelle. I'm doing my best here.
No,
So much on that.
whether Trump wants to end income tax, that's an interesting idea. He has floated that. I don't know that that's feasible in terms of running the economy, but that's for another show.
Sure.
But you did say that he wants gold to become the collateral of the system.
Sure.
Why? Why would the Trump administration want gold to become the collateral level of the system as opposed to what is currently, and that is the dollar? Doesn't that seem contrary to American interests?
Well, no, it's not really. If you think of it this way, what is the what would be a what would make you feel better about holding a U.S. 10-year that trades at 4.1% for 10 years if the Fed's balance sheet to the value of the gold on its balance sheet, if the ratio of the Fed's total balance sheet to its gold collateral was 2-to-1 versus 6-to-1? Would you feel better about holding on to a 10-year and buying a 10-year at 4.1% if gold was $1,500 an ounce versus $5,000 an ounce? Like, the argument that we don't want gold to rise is an older one based on when you wanted that system to continue to expand that way. But Trump doesn't want the system to expand that way. And it was never to our benefit for that to happen. It looks like it on the surface, but what did it do? It hollowed out our entire economy. So what's happening? Dollars flow out. Other people buy gold at stink bid prices. We're not buying gold, right? Everybody else gets to buy gold at vastly undervalued prices and the central banks started buying gold in 2010. And they've been buying gold for 15 years. The Russians have been buying gold for 15 years. The Chinese have been buying gold for 15 years in order to put it on their balance sheets. And they go, look, we have more assets. We have more reserves, harder asset reserves than we had before. And now they're worth even more in dollar terms than they were before. So why wouldn't we want to do that? I mean, again,
would I feel better? Yes, if gold was backing something, but from the U.S. government's perspective, why tie yourself to that? Right? Why constrain yourself? Why take away this exorbitant privilege of being the global reserve currency, the global reserve asset as treasuries are? I mean, we are seeing this trend happening anyway, but why is this something that the Trump administration would want to encourage or accelerate?
Why can't you give the market the choice between a politically stable United States that can afford to continue paying its coupon payments on its debt at 4% versus 3% or 5%, and gold being able to be used as a collateral asset in both the stablecoin market and everything else. So let's back up for a second.
It takes away from your power. I'm not saying that I wouldn't want it, but I'm saying if I'm the government and you have this privilege, doesn't it curtail
eventually that exorbitant privilege winds up, there's no price at which anybody's willing to buy another treasury when you've got when you're presented at $60 trillion with the debt which you cannot afford. Even the Japanese have finally run that whole scenario as far as they can go, and now they're having to deleverage their national balance sheet. So you can do one of two things. You can either add collateral to the balance sheet, to the asset side of the equation, and that effect it improves the value of the debt. So remember, balance sheets, assets, and we always focus on debt because it's the thing we're all worried about. But in a purely fiat system, you have to worry about debt. The exorbitant privilege of sending dollars out and buying cheap capital goods in return, has that consumer goods in return, has that benefited the U.S.? No, it's actually weakened us over the course of time. So wouldn't it be better to bring the leverage down, allow the markets to reprice real production at its of things that people want that generate value as opposed to high valuations? We have value creation. We have a real value creation engine, houses and homes and well-being and high trust society and G.I. Joe with a kung fu grip, flying cars, all those things, the things that people want that make their life better. It would be better if that money was being directed into those concerns, whereas where the money is going now, it's going into making money on money. And we're watching wealth disparity. What have we seen? We've seen wealth disparity from between the upper 1% and the rest of us has done nothing but widen under this exorbitant privilege. So whose exorbitant privilege is it? And I would argue it's not even the American government. It's the financiers who have who have captured that government. And that's why they're fighting Trump on every aspect of his agenda, because that agenda is to destroy that exorbitant privilege for the banking class, for the finance class, for the rentier class, to continue to pull cash flow streams off of overpriced assets that price all of us out of our own lives. We can't afford housing, we can't afford food, we can't afford a car, we can't afford anything else. It makes no sense.
Tom, of course, as you know, I just like to push back.
No, of course you do.
To play devil's advocate
like
here, just to get the answer. But what you are referring to is Triffin's dilemma, which is the problem that a country faces when its currency is used as the world's main reserve currency. To explain to our viewers, to give the world enough dollars for trade and savings and reserves, the US has to keep sending dollars abroad. And it does that by running trade deficits and borrowing heavily. But the more dollars it sends out, the more debt it builds up. And over time, that weakens trust in the dollar and hurts the US economy and hollows out the very fundamentals of the economy that allowed it to be the reserve currency in the first place. So that is, Triffin's dilemma, which many on this show have said is at a tipping point, and they have said that the Trump administration understands that we're at a tipping point, which Triffin's dilemma works against us.
Yes.
But you're saying that the fight now happens because you maintain that this is something that the Trump administration sees, wants to get ahead of, but that there are factions opposed to this.
Sure.
So talk us through the tension. Talk us through the foes here.
Yeah, no, the foes are the way I used to describe it as what I called the Davos crowd, and I think I'll be honest with you. I think I know I coined that term, and I think it's now in everybody's lexicon, which is fascinating. And then at times you want to just break it apart into where various aspects of their power lies. Their financial aspect goes through London, right? And it's always flowed through London. The British Empire on paper is over, except that, again, as I said earlier, they're the keepers of the system. Therefore, they're the keepers of the trust within the system and everything else. And they, for example, when I started going through this route, when I read one day, I'm like, the British pound, what is the British pound good for? Well, it does settle 30% of the world's forex. It's the intermediate currency of 30% of the world's foreign exchange, meaning you want to turn Turkish lira into Thai baht, you got to go through the British pound. You don't go through the US dollar. The dollar gets used in there at some point as well, but so much of it still goes through the British pound. Why? Because all the infrastructure is still there, because the banks they have the relationships and everything else. So that system, it's the only thing the British have left. So in my mind, as I look at this, they're the ones with the deepest ties inside all of our institutions, right? And now we have to start getting into politics. We have to start getting into inferences of, how much air really is there between MI6, the Mossad, and CIA, for example. Like, how much air is there really between certain banks on Wall Street or certain New York money center banks and London? And what about others that are not? And because the one thing I can tell you that they didn't want, and it's one of the interesting things that came up in the the last Epstein releases, which was the conversation between Steve Bannon and Jeffrey Epstein about getting rid of Jerome Powell back in 2018. That to me was a huge signal that they knew they needed to get rid of. They couldn't allow LIBOR to go away. That they couldn't allow the Fed to get the United States to have monetary independence in that respect, or financial independence, because then at that point the United States could then tell everybody, no, this is how many dollars there are going to be out there for you to use. So in order to get rid of Triffin's dilemma and rework it, you've got to, of course, reverse the capital flow. The dollars can't go out anymore. The world has to re-regionalize. We have to have the dollar can still settle trade and be a unit of account and all sorts of things, but it can't be all things to all people all the time. That's now it's a long-standing thing I've always said is that, there's three aspects to money. There's the store of value, the unit of account, and the medium of exchange. It's at the end of the day, pick two. That's what any one particular currency or when any one particular asset can really fulfill. Like even gold can't be a medium of exchange, even if you tokenize it. It's a great store of value, can even be a good unit of account, but it's not a particularly good medium of exchange, right? And so the dollar was all three of those things forever, and that's what Triffin's dilemma eventually, exposes. And so you have to give up one of them. So we can still be a unit of account. We don't necessarily need to be necessarily be a store of value, though. If you build trust in the political and economic system that is the United States and the legal system and all of that, if you regain that trust over time by treating everybody fairly and cutting everybody in on trade deals where you make them partners, not satraps. So there's a huge difference between the trade deals, for example, that Trump has cut with a lot of these countries versus what you've seen in the past. I will give you two simple examples. One, Australia. He cuts a small trade deal with Australia where he cuts them in as a partner on their uranium and their iron ore and all this stuff. He's like, I'll cut you in as a partner. We'll build the processing facilities in Australia. Like, we'll help you. We'll do this trade. We'll do this stuff, but we'll do a joint venture in effect of let's build the processing facilities in Australia so that there are jobs for Australians. On the other side, you have the French, who are still arguing with Niger over 2,000 tons of uranium concentrate. This just came out today, or I was reading today, where Macron says those are our tons of uranium. And I'm like, well, the Niger government's like, yeah, no, we don't work for you anymore. We own it. Ownership is 9/10 of the law, and we want to sell it to the Russians because the Russians are willing to pay full price for it, and you people want to pay us in CFA francs with pennies on the dollar. And you just unilaterally, and so there's a difference in mindset, which is that the French still have a colonial mindset about how they treat their Sahel region of Africa, former colonies, same way that the city of London still feels about all of the Commonwealth and all of its former colonies. And they still feel like that we're still their colony that got away, and they expect their pound of flesh. And I'm like, we're not doing that anymore. So it's a fundamental shift in that what you're trying to do is it's a fundamental shift in mindset. And therefore the dollar doesn't have to stop being a dominant trade settlement currency. It doesn't have to stop being an asset that people want to hold in reserve. But it's going to be a market driven thing that's not based on us. We don't have to liquefy the world with dollars anymore. There's plenty of dollars running around, and we can make those go out in different forms. Those dollars can go out in the form of tokenized gold stable coins or dollar stable coins or whatever. There's a whole different world of ways to make the dollar, to bring the dollar to the people who want it. And if you don't want it, that's fine. We don't have to have it that way because we're going to have a domestic dollar that is going to trade. And this is the hard part for people to wrap their heads around. There's going to be, and there already is, versions of a domestic dollar that's going to circulate at a discount to eurodollars. And what Trump is effectively saying is bring your dollars in here. They go farther. They'll build factories and they'll build jobs for Americans. And then we'll cut trade deals with all of you, and we'll make the world a fairer place in terms of trade. That's the overarching message that he's trying to impart to everybody. That's what his actions on the world stage have been. And those that don't have access to the collateral assets are absolutely opposed to this. And who doesn't have collateral assets? Well, the Russians clearly have tons of collateral assets. The Brits have been trying to get them for the last 300 years, going well back before Napoleon. The United States has almost everything it needs. China is a little short on energy, which is why they've been partnering with the Russians. Okay, but Europe has nothing left. The only thing they really have is North Slope oil, which they've cut off from development because climate change, and Scandinavia. And everything else, they've lost the Donbass. They've lost all the coal from the Donbass. They've lost the natural gas in the Sea of Azov. It's part of the reason why they won't give up on this stupid war. And they don't have the energy. They don't have the uranium. They don't have the timber or anything that they need to run their economy. So of course, what do they want? They want regulatory capture and regulatory control and institutional control over how capital moves around the world. And that's why the European Union is so aggressive in enforcing its new regulations on, for example, American free speech, or, pick any topic that you like. And so, climate change, carbon credits, all of that stuff. That's their raison d'etre. How can they continue to keep that in play and in power so that they can control the system of how money moves, regardless of what we use as money? They don't care about what we use as money. They would prefer it to be a digital euro that they have complete control over everybody's access to, because that would be the ultimate bit of control. Now we're talking about a CBDC. But even if they can't get that, they still want to have political and institutional control over who controls how money flows, not necessarily what we define as money.
Okay. Again, Tom, you've said a
Wow,
lot
I know
there.
a lot. I know a lot to unpack.
You've said a lot there, and certainly a couple of threads that I would like to pull at. But in the interest of keeping it focused on what I think our viewers, or the majority of our viewers,
Sure.
would probably hone in on, I get your point,
Right.
that there's a rebalancing of the system, that Trump wants to strengthen the fundamentals of the economy, that Trump wants to strengthen trade partnerships and relationships that serve everyone, and that there is a re-collateralizing of the system, which will ultimately result in the repricing of gold and of silver. And that's where I want to focus on right now, because I know that's the major focus area for most of our viewers. You said that Trump and dissent, as part of this agenda, have been attacking the LBMA.
Yep.
The London bullion market.
Yep.
Explain what you mean by that.
Sure. So last year, big fanfare, right? As gold started breaking out in the first quarter last year, and all of a sudden the LBMA was like, they went from normal T+3 settlement to T+93 settlement because they didn't have enough gold to supply the contracts. And this was going on, and there were story after story, report after report of all this gold draining into the United States. So in broad terms, very simple terms, to keep it from getting too far in the weeds, let's just make it simple. Trump and dissent were running a weak dollar policy, which pushed the euro up at the same time, and they were buying gold with it. Now, was the gold going onto the national balance sheet directly? No, it was going into things like GLD and other pockets.
Wait,
of the
say that
American
again. Say that again. You're saying
So
Trump and dissent were buying gold?
In effect, they were buying gold. They were using the I think that there's very strong inference or it's very strong circumstantial data that tells us we were the ones pushing the price higher. And we were working with, and I also believe that we were working with the Chinese, FYI, and end up taking turns doing so. My friend Vince Lanci does a brilliant job of breaking down the actual flows on a month-to-month basis. But so there was that. Then they moved to once they got. So you attack gold and you say, I'm going to force you to deliver on all of those paper contracts that you've got sitting there. So it's in everybody's best interest. It's in Saudi Arabia's best interest. It's in China's best interest. It's in Russia's best. It's in everyone's best interest to finally break that system. Because remember, that system was probably unbreakable if the United States kept backing up London, because we have so much money that we can bring to bear to move the gold and silver market to the price that we want. In this space, we've been complaining about it for as long as I've been part of it. Going back in my life to around 2002, 2003, they've been suppressing the price of gold. Okay, but how do you get from $1,800 gold to $5,500 gold, or today $5,100 gold, without the United States, breaking that triangle trade, getting out of helping London maintain control over the price of gold, silver, and then by extension, everything else. Because these are the collateral assets of the world, right? This is the stuff that matters. And so and conceptually, why would the United States allow the 19th century power, the 18th and 19th century industrial power, to have control over the pricing mechanism for 21st century industrial powers? It doesn't make any sense. They would want that power for themselves. You asked earlier, why would we give up the exorbitant privilege of printing dollars in order to buy goods? Well, why would we allow Britain to continue the ability to price gold and silver, and then by extension, the copper and the lead and the zinc and the aluminum and everything else, if they're not the industrial power anymore? It doesn't make any sense. We want that power for ourselves, because if we're going to build an industrial economy, we need to be able to price our inputs properly. And so I think Trump and Dissent, I'm going to say this is I think Trump and Dissent ran a weak dollar policy to buy as much gold as possible, break the LBMA. The Chinese would come in here and there and assist along the line. He did that for a while, and they used it into the tariff tantrum of last year, and gold rallied up until around June. And then after June, silver started to break out. And a lot of this stopped the minute the European Union cut a trade deal with the United States, which was in late July. There are very specific time. I have like hours of looking at this and looking at the charts of various bond spreads and everything else. And you can just see, if you look at the way the euro traded against the dollar, and the way then the euro traded against the yen, and the way it traded against silver, and the way it traded against gold, you see these big multi-month waves of these movements in these currencies and in these pairs. And then, and of course, at the same time in the bond spreads, and you're like, oh, it's all right there. That someone is running a very sophisticated trade, and Scott Bessent is a guy who understands those trades. Because remember, it wasn't George Soros that broke the Bank of England. It was Scott Bessent working with George Soros that broke the Bank of England. Bessent was the architect of that trade, FYI. If you did not know that, he was the architect of the trade
At the quantum fund?
Yeah, he was there at the time. He was the guy who did it. He's the guy who understands this.
All
stuff.
right.
So
yeah, I get that. Okay. I mean, I hear that you're saying you're looking at some data. You don't have any concrete proof of this. Obviously, this is speculation.
We know that certain American banks stood for delivery on this gold. We know that,
Mm-hmm.
and
Right.
so that and I'm not the only one saying this.
Well, I'll tell you, Andy Shechtman, he has a theory that he does believe that the U.S. is quietly preparing for a monetary reset that does bring gold back into the system to re-anchor
Absolutely.
confidence in the treasury market, even if it means sacrificing the dollar's current structure. And he points
agree.
to the fact that the U.S. has become a net importer of gold since the Trump administration.
Mhm.
And he believes that there could be some shadow program to buy gold, that the president can direct the Treasury Secretary to
Mhm.
do so. Bessent, as you mentioned, is a gold bug, and that this can be done under the Gold Reserve Act. You have the Exchange Stabilization Fund, the ESF, and it can trade gold with the Secretary of the Treasury's approval and the president's sign-off. Now, those transactions must be reported to Congress, but that part could be delayed. And Andy Shechtman thinks that this is what could be happening, that the U.S. could be secretly buying gold.
Well, the other angle on this. Yeah, no, sorry.
Go ahead.
Okay. Well, I was going to say is that the other angle on this is that you also have the bullion banks, especially in this case, J.P. Morgan, which is now the sole custodian of GLD, right? And I think Morgan's been buying gold as well. There are others
in
that are
collaboration with the U.S. government. Are you saying that J.P. Morgan is working with the U.S. government? Where is this gold going to?
I don't know. I'm not going to. I don't want to say definitively, but all the signs are there for this particular structure that we're talking about to have been put in place, and you see it because it's the thing that makes any sense. J.P. Morgan plays a lot of games. on the COMEX with registered versus eligible, and has been constantly playing games with the price. And it's certainly been doing it during the silver run up over the last couple of months. And again, silver is the flip side of this. It's the same trade that they've been doing along with the Shanghai. We're also finding out that Shanghai isn't as physically settled an exchange as they like to lead everyone to believe as well, meaning there's a massive dearth of actual metal versus the amount of contracts that are out there. And that's ultimately what's really important here. We are looking at the deleveraging of a 200 to 1 paper gold or paper silver system that's collapsing. And at some point, the LBMA is going to collapse on this. And I don't know when it's going to happen any more than anybody else does.
It's going to collapse because it's not going to have the physical metals.
It doesn't have the
what you're
physical
saying?
silver. I think we're going all the way back to those old stories from like Jim Sinclair and FOFOA and all those guys talking about how, at some point everyone's going to stand for delivery and the paper price is going to go to zero and the physical price is going to go to infinity. Well, I don't believe that story because I'm not that Malthusian in my thinking. But what's going to happen is we're going to see a very strong and hard rise in the price of gold until somebody cries uncle. What I found interesting today, Michelle, and I know that we're pressed for time, but I want to bring this up because for everybody to bring this back full circle to the tariff thing. Mm-hmm. From the moment, about an hour before the SCOTUS ruling came down about the tariffs, silver started to break out, and it closes today over $84 an ounce. And China is still on holiday. Me and everybody in the world would have said, well, during this time, China's offline, silver's not going to go anywhere. And yet silver rallied $13 this week from low to high. Like someone's in there buying silver, and someone is in there pushing on the someone's pain point. And I think, again, rampant speculation, inference on my part. My point is, I think that's us telling London, you got a pound of flesh this morning, you got your tariff ruling, that's nice. We're pushing on the silver price. And
You think London is
going after you?
You think London is the one that's influencing these decisions?
Oh, absolutely, I do. That is my.
Because you said earlier that has been my.
I think London, a mixture of London and old colonial Europe. I absolutely believe that they're the ones that own half of our politicians. This is my argument about Davos / the city of London. It's been going on for years, and I use that framework. And every time I use that framework, and I use it, I rarely miss. Right, and
so those are the foes.
That framework hits. Like I knew what I knew what was going to happen the minute that SOFR became a thing. I knew how hard they were going to stop Jerome Powell from getting a second term. I understood why Lagarde then put in the transmission protection instrument to protect bond spreads, and she's been running a defenestration game against the German 10-year for 4 years now against Jerome Powell's high interest rates. Last summer, we watched Trump put tariffs on, run a weak dollar policy, and then Powell kept the eurodollar markets drained of dollars by keeping interest rates at 5.5% until September. This was all, I think there was all coordinated action. I think Powell, Bessent, and Trump all knew exactly what they were doing. I think Powell still has Trump's ire because Trump wants lower interest rates because I know that what Trump wants to move on to the next phase of his plan, which is to rebuild housing bring Fannie and Freddie out of conservatorship and all that. But at the same time, I also can't really fault Powell for being slow to bring down interest rates, because at a certain level,
right,
you have to keep the pressure on the offshore dollar markets and keep them tight, because when that happens, it means that when leverage is tight within the eurodollar, when credit's tight within the eurodollar system, especially with the Bank of Japan now ending the yen carry trade, or moving towards ending the yen carry trade, it creates demand for high trust assets. And in this case, U.S. Treasuries, and it actually helps to attenuate the long end of the yield curve. And that's what we've seen. And we've seen it very, very strongly in the last 3 or 4 weeks, where we've seen a big move down in the extreme end of the U.S. yield curve. In that 30-year, it's about a 25 to 30 basis point drop. It's been very, very, very telling that there's worries within that people are having to, they're buying high quality collateral where they can get it. And if for a lot of players in the world, high quality collateral is still U.S. Treasuries because that's all they can buy. So,
well, you have been correct in some of your calls regarding the Fed moves under Powell. When we've spoken in the past, you did say that he would continue to raise a few years back when we were chatting, when people did not expect that. And you did make the argument that Powell was part of the faction of American capital that realized the globalist system was going to destroy the dollar and decided to fight back.
Yes.
I understand. We're not going to really unpack that. You have touched on it briefly, but I understand that now some of those players have changed and that Powell is not serving the interests, as you see it, of what the Trump administration wants as phase 2. But I don't want to get too much into that. I just wanted to clarify that a little bit for our viewers, because again, we'll go down a whole other rabbit hole there.
Again, I mean,
but let's talk about gold. Let's talk about gold as we start to wrap up here, because as part of this whole conversation, you have said that Scott Bessent wants $20,000 gold.
I think $20,000 gold is. I don't think anybody wants $20,000 gold. But I do think that $20,000 gold may be unavoidable. If we could, again, if you accept my framework, and I'm, run with it. If you accept the framework that we have this fight between the old colonial powers of Europe and the banking families of Europe and effectively the upstart United States, then now the question is, will there be a negotiated settlement, or are they going to fight it out all the way to the end? Right? Is this going to be a fight to the death, or is it going to be a negotiated?
Is this a fight though? Is Trump taking on Europe, or is Trump just doing what he thinks is best for America, and that just happens to not serve Europe and the city of London?
No, I don't think it's a lack of mutual coincidence of wants at this point. I think he knows that one is hostile to the other, meaning Europe is hostile to us. And they've made that abundantly clear over the course of the last year. And he's done things specifically to invoke their ire, to prove it to the average person that they're for lack of a better term, they're the jilted ex-wife that wants alimony, and to like put it in those terms, right? I think he's done a yeoman's work on this. Like, I think their reaction to Greenland, for example, was completely over the top. I think the way Mark Carney came into Canada and vastly overreacted to him, like poking them with a joke about the 51st state. And then Mark Carney used that as a means by which to come into power in Canada. It was insane. And the level of histrionics that they have embarked on to stop Trump trying to get peace between Ukraine and Russia. Another example of this. So I think Trump keeps offering them a peace deal, and they keep slapping his hand away. And I think that this, just to bring it all the way back around, the Supreme Court ruling on the tariffs, I think, is one of those. And so his natural reaction would be to unleash the Bessent and say, all right, fine, buy silver.
Do you think that that's what happened today? You think that in response to the Supreme Court ruling, which you say may have been influenced by the powers that you describe as the City of London, Trump says to Scott Bessent, let's get the price of silver up to put the squeeze on the LBMA?
Yeah, you see, this is the world. This is how I see the world.
That seems very micro,
Yeah, it is. I think these are all very important aspects of the fight. It may just be that my focus determines my reality, and my reality is completely off base. I'm not averse to the idea that maybe I'm just irretrievably insane. But at the same time, and I mean that sincerely, I get up in the morning every once in a while, like, dude, are you nuts or not? But when you do this on a regular basis and you do this I'm in this all day, every day. And I watch these little moves and I'm like, that happened, then that, then that, then that.
Cause and effect,
These
you know.
are kinds of, I like strategically speaking, Michelle, when I sit down and I game a lot of this stuff out, I think it through. I'm like, oh, that's what I would do. If I were Trump this afternoon, and I know, for example, that they've got something on John Roberts, and Roberts' court did this, I would be like, do that, execute that move.
Why not buy more? Why not why not then blow it up? Why not?
Well,
Silver
silver moved 9% today. I mean, how much farther do you need it to go in one day? Like 9% is a lot in the silver market in one day. We moved like 7, 8, 9% today. It was up $84 on the close.
So you're
today.
saying that you believe is in retaliation to the Supreme Court
It's a thing.
ruling.
Like if you're going to, you keep putting the pressure back on Europe, knowing full well, or on London, full well knowing, because look, this is not just isolated. You had the Prince Andrew's arrest yesterday. You had them telling us that we couldn't use Diego Garcia to the basis Diego Garcia to attack, to put our guys in to put our planes in the fight against Iran, or all of these things. The British delegation crashes the Russian-Ukraine peace talks in Geneva. Like, all of these things are absolutely connected to each other. And silver is not just, it's this nice little industrial metal. At this point in time, it's between $75 and $85. Given the structure of the silver market and the massive blow off top and emotional, we should be getting into a period of consolidation in silver. We should be getting into a lower volatility environment where people start, we had our fun, the party's over, and now everything just kind of peters off and peters out, and we get lower volatility for 3 to 5 months. We didn't get that today. We got a massive move today. I was very surprised. I was not expecting silver to move $7 today, and then a couple of dollars. I was not expecting it with China offline. I would have bet good money if we were to close this week below $75 on silver. I'm not a betting man. Right.
Well, it sounds like you were expecting it if you see silver as a weapon that.
Well, I didn't. I also didn't expect the Supreme Court to strike down the tariff.
Well, I meant in terms of cause and effect.
So, ultimately, I would have. I was, as of yesterday, I was literally like, no, they're not going to knock the tariffs down.
All right. So
I was genuinely surprised, shocked, and angry when I saw the result. When I saw that this morning, but I'm not going to lie.
All right. So let's bring this full circle if we can.
Sure.
So despite this tariff setback, you still think Trump is going to continue with his agenda here to reset the economic system. What does that end game look like? If he succeeds despite this setback, what does that look like in the end? And then we'll get into what that means for gold and silver.
Sure. What it looks like in the end is that Trump will be able to, he's going to fight. The big one, Keynesian economics will finally be killed. Let's just, I think this is probably the best way of looking at it. Because I've thought about this, knowing, in some ways, I can see where we're going with this conversation. I think it's finally the final refutation of Keynesian models of the relationships between productivity, inflation, work, all these things. I just think that so many of those ideas are not valid. And in many ways, the same way that I used to, be a doctrinaire Austrian, and I'm thinking those arguments aren't particularly good either anymore.
What does it mean for America? Well, let's not get
for America, it just means
for an economist that don't know the difference between Austria and
the problem here is that the enemy gets a vote, Michelle. What I want to see is what I hope, if Trump is successful, and the path between here and the end game, I don't know what it's going to look like, and it could be very violent. And I don't want to sugarcoat anything, but the end game is, let's get back to a productive middle class, and It means that Wall Street has to be brought down a peg. It means that the rentier, for lack of a better term, the rentier class needs to get back to putting wealth back into helping to build wealth within the economy as opposed to just constantly extracting wealth out, and that the lower classes are not radicalized into thinking that no one cares and about them, and that we bring everybody back up, we bring everybody up again. And that's what a capitalist society is supposed to do, right? That's what free markets are supposed to do. They're supposed to reinforce our desires to turn what is into what we want it to be, right? We don't have that today at all. And that's what Trump is, and I think that what Trump is trying to do now, and I'm not saying I agree with the entirety of this program from a philosophical perspective. This is important. But I think that as a transition state from, in effect, a failed economy to getting back, and a failing society, one on the brink of literal civil war, and I'm not overstating that when I say that. This is something we haven't discussed at all yet, and we don't have time for. But to go from that to the to an end game where we can get back to a productive and burgeoning middle class again, that's a process, and that's a difficult process, and it's not going to be anything. It's not going to be handed to us. We're going to have to earn it, right? And setbacks like today are part of that process, and it means that our job is harder if we want it, but then we have to fight for it. So there's that. So I hesitate to go too far out in time, but ultimately because the twists and turns are going to be horrific. They're going to be dramatic. I mean, we're already seeing them. So for gold and silver in the long run, I think the prices have to go much, much higher. But we could also, there's a non-zero probability that we negotiate a settlement at $12,000 gold, not 20. It all depends on, how affected the enemy's votes are, for lack of a better term. If they decide to fight us all the way to the end, it's going to be $20,000 gold. If they decide to cut a deal before that point, we could top out at 10 to 12. How about that? Does that make more
when
sense?
you say cut a deal, you make it sound like this is like an overt conflict. It sounds to me more like it's a covert conflict.
It's a conflict that is overt, but it's taking place one step removed from the headlines. If you understand what I mean. It's a fight amongst the oligarch class, but we interact with it at the headline level. Okay? That's the
So cut some kind of surreptitious deal is what you're trying to say. Some kind
they will eventually sue for peace, and they will stop fighting us, and we'll know what that looks like when they stop fighting us. They'll know when you see something like
indirectly
Mitch
fighting
McConnell finally resign, or John Thune put the SAVE Act up for a vote, or Chuck Schumer finally, you'll see it in their minions acting out of character or submitting. Okay. You'll see it if King Charles at some point dissolves Parliament. It will be something, or Europe finally says, okay, fine, yes, Zelensky, it's time to end the war. It's going to be a big, big move it'll be on the geopolitical board, not on the financial board.
I will say, to bring it back to your earlier point about how Trump needs to move quickly, one of the factors, of course, is term limits, and we also have the midterms coming up.
Yeah.
So could that derail this whole reset?
Could it? Yes. Will it? No. It'll make it harder. It'll just run out Trump's term, and then they'll have to try and steal 2028. And by that point, like, all bets are off as to whether the United States is still a 50-state compact or not. I'm telling you, we're entering into a period where major political change is very, very likely. I don't know who's going to, and it's a race as to who breaks down first. The European Union, China, the United States, everybody's fighting it out. And I don't have a good answer for you today. But I can tell you that that's the actual fight. Everybody's trying to fight that.
Okay. Well, we will have to bring you back to analyze and dissect this further. Tom, thank you so much for sharing your insights, your speculation.
Yes.
And your theories with us. Always appreciate it, hearing your perspective. Thank you, Tom Luongo. Where can people learn more about you? Where can they hear more of your thoughts?
Sure. A far worse version of me will show up on Twitter every day at TFL1728. And of course, you can follow the work and support the work over at Patreon/Gold Notes and Guns, where I do a twice weekly deep dive into the headlines of the day and marry that to what I'm seeing in the capital markets. So it's all of what I just described in terms of what I do, what I just did here. I then tie it directly to what I'm seeing in the capital markets, in gold, silver, Bitcoin, various bond spreads, the bond markets, the Dow, and the rest of it. And of course, the monthly newsletter where we do a portfolio and take our looks ahead.
What's the practical investing takeaway from this tariff development today?
With the tariff development today, my standard answer is Trump is going to create a bottom-up reshaping of the American economy. So I'm like, go along the Russell 2K. At this point, right now, I'd say, that's a tough one, Michelle. I don't know. I don't have a good answer right now. Talk to me in the 72-hour rule. The 72-hour rule is in effect, unfortunately.
We'll give you some time to process. Tom, thank you again. Tom Luongo. And as always, a big thank you to you, our viewers, for watching. We do love to hear from you. So please feel free to praise, whine, or just opine. We take your comments to heart. For me, Michelle Makori, and the rest of the team, thank you for watching. And until next time, stay sovereign.
This is The Real Story with Michelle Makori.